Let me welcome on board Rajat Sharma, who's joining us from Sana Securities. Rajat, hi, good to be speaking with you. What's your sense as to the market mood ahead of the elections, and what are you doing with your portfolio right now?
Yeah, good afternoon. Thanks for having me on the show. Markets have run up a lot, but the kind of earnings that we saw for the full financial year, it's justified the way markets have run up. Even if you look at the macros, everything looks very, very good. Government's fiscal deficit is likely to reduce given the kind of dividend RBI has paid the government. So expect big announcements from the budget. Inflation is stable. Tax collections are at a high. And the biggest thing for me is that the overall valuations of the market, which have remained on a trailing basis between 20 to 23 over the last 3 4 years, are right now, despite the run up, at around 21.9 on the Nifty. So it's a little expensive, but it's not overly expensive. We've seen these kind of valuations before. And my point is that, even if markets were to fall, if markets were to correct, or, as some people are saying, a crash, first of all, I think 10% is a correction and a 30% fall would be a crash. In either case, I think India is a bright spot right now where we are, whether it's a correction or a crash, I think it won't last very long. So if we fall that much, I think 8 to 10 months from that dip, we will bounce back. So, you know, if there is one market in the world which will recover fairly quickly in case there is a slowdown, which, first of all, I don't think there is any reason to expect there to be a slowdown right now because interest rates in the US are at an all-time high. In case there is a slowdown, they'll cut interest rates. Again, as I said, inflation in India is under control. Yes, election results is what everyone would be looking out for. A stable government at the center would probably be the only icing on the cake we can add. So personally, I do feel valuations are a little stretched. A lot of stocks are trading far, far above where they should be trading. But again, this is not the market where you would sit outside of the market. A correction or a crash, as I may, say, would happen like a bolt from the blue. You can't see it right now. But I wouldn't worry too much about that because even if it does happen, it should bounce back fairly quickly, is my sense.
So where is it that you are profit taking already have?
Yeah, so I have recommended Hero Moto on your show many times before. I've got in at 2200. We've sold a bit of Hero Moto stock, and we've actually added a few stocks in pharma space and in auto space. So Hero Moto is a stock where we've taken some profit off the table. I bought Gulf Oil about 2 years back. That's one stock which has run up a lot. We've sold some of that, and I've added Loris Lab to my portfolio. And I was just doing an analysis on this company. Right now, the free cash flow to equity is about 356 crore, and I expect that to reach to about 1,075 crore based on my analysis in the next 3 years. And if you see the stock right now, it's trading very expensive at a multiple of about 150. But that's because the company has done huge capex over the last 2 years. To give you the exact number, it's about 2,600 crores, and that's what I see would add to the free cash flow going forward in the next 2 years. And two segments where the company has made a lot of effort. One is CDMO, which is contract development and manufacturing, and the other is biotechnology. So biotech is right now just 2% of the revenue, which they expect to go up to 6% by 2027. And antiretroviral, which is their primary business, is about 65% of the revenue, but was 65% of the revenue in 2018, but today it's about 37%. So what's happened? But even though in percentage terms it's fallen, the overall share of revenue from antiretroviral, which is their bread and butter business, has grown from 1,300 crore to 2,200 crore. So it's basically the pie is expanding. Biotech business and CDMO business will expand, and that would add to the additional revenue in the next 2 to 3 years. So this is a very, very good stock to add. It looks expensive, but there's a reason why it looks expensive. I expect the revenue to swell a lot going forward over the next 2 to 3 years. So that's one stock we've added. The other stock we've added is Tata Motors because posted excellent numbers. The stock has run up, I agree, but now finally everything seems to be falling in place for Tata Motors, both in terms of the products and the geographies. 62% of the revenue still comes from JLR, and finally, both Jaguar and Range Rover, both are coming out with electric variants. They've got some 33,000 odd confirmed, not confirmed bookings, but interests. People have already lined up to, buy that car. And in India, and the passenger vehicles also, they're the front runners in terms of EVs. They've got 4 electric vehicles in India. They're going to launch 5 more. Commercial in Delhi are now turning electric, and that's a trend we'll see in most urban cities in India. And Tata Motors is again at the front of these commercial vehicles in place for this stock. So that's another.
Tata Motors as well as some of the stocks which have been recently added to the portfolio as per Rajat. But let's talk about what lies ahead for us in terms of which are the big cues to watch out for tomorrow. Of course, today we'll get the consumer confidence data from US, and the market is going to start after a day's holiday. So it will be interesting to track what comes from across the globe. And the US Fed Beige Book is expected to come out tomorrow. So that's another bit to watch out for. Of course, it's Bank Nifty expiry. So ahead of that, we'll be watching out for any volatility on account of that. Whether that 50,000 mark is hit or not is something to watch out for. Earnings wise, there's Tata Steel, and from the broader markets, there are likes of Lemon Tree, Mazgaon Dog, Global Spirits, etc. Even Bata, Cummins, these are the companies which will come out with earnings. Tata Steel will also mull a fundraise, so interesting to see what happens there. And then Forgings will likely decide a bonus issue. Seller World might actually carry out a preferential issue. So these are some things to watch out for. In fact, talking about Tata Steel particularly, we expect the overall earnings to show a decent amount of growth. For Tata Steel, we are working with a growth of around 4% on a sequential basis in terms of revenue, so that the number comes closer to around 57,000 odd crores. Remember, the India operations have been doing okay, but the realizations this time around had taken a dip. That's what we have seen from the likes of JSW Steel, etc. as well, and that's why we are expecting that the revenue growth is going to be a bit softer. And to add to that, the coal which was consumed in the quarter gone by came in at a higher cost. So that is why there might be a bit of pressure as far as the profitability is concerned as well. Having said that, the Europe EBITDA per ton should improve, and that's why we are expecting the losses there will narrow on a sequential basis. In fact, the overall deliveries were up around 8%, and that's something we know from the European business. But the higher sales volume, improved realizations, and the lower operating costs will aid the spread sequentially there, and the EBITDA per ton estimates are expected to be, the losses that is expected to be around $105 to $115 per ton. In terms of what to watch out for, well, that entire transition in the UK is something which remains a key monitorable. The capex guidance for the coming 2 to 3 years, what happens to the debt as well, and the overall performance of the India business, whether EBITDA per ton declines around 15% or more to around 15,000 rupees per ton level. Those are the key monitorables to watch out for from Tata Steel. But talking about metals, Vinay, what's your take on the metals pack? Are there any names that you would want to recommend? Because NALCO, NMDC, they are seeing quite a bit of volatile move today. Anything from the metals pack that looks interesting, Vinay?
Yeah, so for last 5 trading sessions, we have seen some consolidation in the metal index. But if we were to look at the primary index, if we go by the international commodities, there has been a long-term breakouts on the commodity indices, and the index that we track about for the commodities, like we have been tracking Bloomberg Commodity Index, then US Metal and Mining Index. This all indices have actually given a long-term breakout on their charts. So primary trend of the commodities are bullish, and especially metal and mining stocks are expected to do well, because if you go by the ratio charts which divides the metal index with the Nifty, that ratio chart of metal divided by Nifty has given a breakout. That means clearly that indicates that the metal index is going to outperform the Nifty in the coming times. So this is the sector we are looking at. If market goes down from here, which sector to buy? I think metal is the sector. Mining is the sector in which we can take a long-term position, medium to long-term position. So primary trend is quite good. And today, because of the good result, NALCO actually opened up with a gap. So the Hindalco, Nalcos, and Tata Steel, these stocks, Vedanta, even Jindal Steel, all stocks are looking very strong on positional basis. However, in last 3-4 sessions, it is just into consolidation. But once we see Nifty coming to the support level of 22,800 odd, then we can think of going long in this large cap metal stocks which are looking very strong. So Hindalco, Nalco, Tata Steel, as well as the Jindal Steel and Power looks quite convincing on the primary trend and weekly monthly charts.
Pharma, that continues to be in the pole position today as well. So Glenmark, after that tearaway move of, I think, almost 8% yesterday, puts on another nearly 4% in trade. Divi's Labs is the other one, which is holding out 3.25% as we speak. So that's also looking strong. Kunal, let's just revisit some of these charts, Divi's as well as Glenmark, because nice consistent follow through on both of these names.
Yeah, so I think Divis is something interesting because that stock was a huge underperformer, I think, for a good part of 2023, start of 2024. I remember, I think the stock, at one point was almost on the verge of breaking below the 2500 mark. Also, I think few quarters back. But now the stock has made a good comeback. Recently, also I think the stock was almost at 3500, 3700 mark, and from there we saw a good recovery for DV's Lab. Now, interestingly, the stock and the volumes which have moved up higher for DV's in this leg of uptrend is on the much higher side as compared to the previous corrections for the stock price, and that adds to the fact that there could be more long built up which have happened, or delivery based buying which has happened into the stock, and that could probably lead into the stock into much more stable uptrend. So earlier it was more of a sell on rallies for DV's Lab where the stock was going through a sharp downtrend. That trend has reversed completely, and now we are looking at a potential buy on dips in case if there's any kind of a correction. Glenmark has been a strong outperformer. I think from those levels of, I think, 600, 650 mark last year or the previous year to that. I think from there the stock has moved up quite well. The behavior of the stock has changed. It's now become more consistent on the upside. There was a pause for the stock at 1000 odd mark, 950,000 levels sometime in mid of 2023. But after this recent bout of consolidation, the stock has made a good comeback, breaking past about the 1100 plus mark. So I believe Glenmark is also something which looks attractive. From the other names, I think Biocon is something which I would be bullish on from current levels. And my sense is that the stock, which had been a huge drag and underperformer, is showing all those classical signs of a potential breakout on the long-term basis.
Okay, point taken. So those are the top bets within the pharma space. Rajat, you've already given your top bet within pharma, which is Laurus Labs. So let me shift focus and talk to you about capital goods and defense, because these are two themes which have worked very well for investors over the last 12 to 18 months. But should one continue holding their positions, or is it time to perhaps profit book, or for people who have missed out of the rally, should they add?
I don't think so. I think my view on defense stocks, one, again, they've run up a lot. And most defense stocks, particularly, most of these are government companies, whether it's Bharat Electronics or BHEL or, most of these companies, in line with how PSU stocks have run up, have already run up. So I expect that, post the election results and, 10th or 12th July, we'll have the union budget. Post that, there would be some correction in these stocks. Now, I don't buy stocks with a 1 to 2 month kind of time horizon. So there are other areas, other sectors where I'm looking to do some buying right now, because to the extent we are getting incremental money, I'm looking to add on to a lot of the stocks which I already own, but nothing in defense for me. I'm just this morning we've added a lot more of ITC. The company has declared a good dividend of 7.5 rupees. If somebody still wants to get that, 3rd of June is the record date. So if you buy today, you'd certainly get that. And 6th of June is when the shareholders approve the demerger of the hotels with a ratio of 10:1. I think the environment that we are in, I expect that if a hotels company, which is the second largest hotels company after Indian Hotels, we've got some 10,000 plus rooms as ITC. So if a hotels company lists in this environment, there would be a huge value unlocking. So at 430 rupees, that's one stock which, if you don't have it, do add it to your portfolio. If you have it already, add more of it. So that's one stock that we've added. I'll also tell you another sector and stock which we've initiated coverage on and we're looking to buy is a company called Great Eastern Shipping Company. And they've posted brilliant results. The stock is available at a price earnings multiple of 5.3. Keep in mind that shipping is a very cyclical business, and right now the business environment is extremely strong. They've got very high carriage rates right now for their crude tankers, product tankers. But this company has a huge amount of cash on their books, which will help them buy assets, which is more vessels and ships when prices drop. And until that happens, the business environment is so strong, they'll continue to make very good money. So at this valuation, 1,000 rupees a share, that's something you can add. And yes, it's got a current dividend yield of 3.6%. So not defense, but shipping is something like Great Eastern Shipping is one stock which we're looking to add. I'll give a disclosure. We don't have it already in our portfolio. We've not recommended it. We've just initiated coverage. But all the other stocks that I've spoken about, Laurus and Tata Motors and ITC, over the last 2 weeks, we've bought all of these stocks in various portfolios.
Okay, interesting. And interesting that you already have the budget dates as well, Rajat. We were just wondering as to when it's going to be. Did you say 10th or 12th July?
Yeah, I read it's between 10th to 12th July. So obviously they'll announce the exact date after the government is formed, but tentative dates are 10th to 12th July. That's when the budget is, yeah.
Okay, great. Maybe we missed that. But let's get in some, closing strategies as well, some BTST trades. Vinay?
Yeah, so as we discussed about the FMCG index, so there are other stocks which are also looking strong from the same sector. So Pidilite is one of the stock which is actually consolidating for last let's say 3 to 4 weeks, but I see some momentum coming back into the sector as well as the stock. So Pidilite can be traded long around 3050. Stop loss can be kept at 2990, and on the upside, I'm expecting a target of 3130. The another stock which is looking relatively strong on the chart is the stock from the auto space, Hero MotoCorp. So as we discussed, it was shown that it has given a breakout from the consolidation. So Hero MotoCorp can be traded long around 5200. Stop loss can be kept at 5140. On the upside, we can expect a target of 5290 and BTST or 1 or 2 days trade. So Pidilite and Hero MotoCorp can be traded along with the mentioned stop losses.
Right. Kunal, what about your BTST ideas?
So I'll go with 2 buy calls. Pidilite as a first stock which I would suggest as a buy. The stock inching towards a triangular breakout about the 3050 odd mark. So I would suggest a buy with a target of 3150. Stop loss at 3000. And Shree Cement is the other stock which I believe is coming back into a bit of a reversal mode. So the stock in the last 4-5 days had gone through a 1000 to 1500 point correction, expecting the stock to get into a reversal and as well as a rally on the upside. Targets of 26,500. Stop loss at 25,000.
Talking about a reversal, that's what is underway in the market right now. If I have it right, Reliance was actually comfortably trading in the green around the noon time when I was doing the afternoon show. It's actually moved completely into the red right now. It's actually down 1%. So from the highs of the day, there might be a 1.5-2% correction on Reliance alone, and it's now threatening to go below the mark of 2,900. And that's one of the reasons that Nifty has moved below 22,900 now very decisively. So we have suddenly taken a knock, and we are at 22,860 right now. Just in the last 5 minutes is when we have seen this, breakdown happen. Bharti HL is the other one which is contributing on the downside. ICICI Bank too has reversed course from green into the red. ITC has been under pressure for the last couple of days, so that's clearly not batting for the bulls. Adani Ports is the other one which is down. What's actually just managing to hold out is SBI Life. That stock surprisingly is up 3%, and Grasim and Asian Paints are the other ones which are actually high by 2 to 1.5%. Maybe the paint company is rejoicing the fact that crude has come off substantially from the highs of the year, but not sure. The markets are clearly not rejoicing at all. Let's pull up the India Wix and see where is it, because it was at that 2-year high level of 24.3, 25.4 thereabouts. Continues to be around that level. 5% up move coming in there. Kunal, anything interesting in the market that you would want to spot, and what's the significance if we do end below 22,900? Is that a red flag at all or not really?
Not really. I think 22,700 is a critical short-term support, but I think looking at the market texture is more pressure from the mid caps and small caps rather than pressure from large cap names, and I think that's going to be maybe some bit of short-term pressure for portfolios rather than for the overall benchmark indices. At VIX of 24, if you are 50 points, 100 points range on the Nifty, which is just 0.5%, I would still say that that's a very positive sign for the indices, because then you're trying to absorb as much of high volatility within a confined range for the index, and that too given the expiry week where there's bound to be a lot of pressure on the indices stocks due to the rollovers, pending rollovers. So I think on that front I would believe that a 50-point range plus minus on the index is still a positive sign.
Yeah, and actually advanced decline ratio is something that we should watch out for, because the point that Kunal was making on the broader markets is very evident. If you look at the advanced decline ratio, you should pull that up, because I think that will tell you that there are much more stocks which are actually in the red on the declining side. So almost 1800 stocks declining to 600 stocks advancing, and that tells you the kind of nature of the market right now.
Oh, yeah, absolutely. In fact, look at Naukri, look at Idea, Sale, HAL. We were just pointing out as to how some of these PSEs are the ones which are caving in. So HAL, one of the best performers perhaps from the entire defense pack, or the entire PSU pack, to be honest, 2.5% lower for that stock as we speak. Even some of these, mid-cap IT names which began to see some sporadic moves. Coforge, for instance, that's also down about almost 2.5% as we speak, and that's similarly the case with an Info Edge as well. What else is actually down? So BHEL as well, DLF, Godrej Properties, in particular Realty as well, is facing the heat as we speak right now. Of course, there is a BOB, a Polycab, etc. as well, Tata Power and ABB, which are also seeing some pressure come by. But that's pretty much it. We'll thank all of our experts for taking the time out and joining us today. Let me hand it over to...
If you like this video, then like, share and subscribe to ET Now.